Alright, we are live. And, yeah, so I wasn't on yesterday. So I technically broke the streak, but yesterday was President's Day, which is probably the weirdest holiday. Like, schools get it off, and, like, businesses close, and, like, bank stuff doesn't work. But it's, like, George Washington's birthday, so, okay. Anyways, my dad is a teacher, and so he had the day off, so we went out there and hung out for the day. So I was not working that yesterday. So I'm having a bit of a dilemma. There's just not really great information on how to do backtesting. It's kind of weird. Like, there's some code here, but it's like so focused on the Python stuff that it's not like, hey, this is the math to do backtesting. And also, Python just sucks. I've never really done too much with Python, but man, it's super weird with all like the indenting and stuff, and like, I don't know, man. Oh, what is this? Oh, that's just like a data thing. Custom analysis. Ooh, custom times. What if I do know how to code? Yeah, this is what I want right here. A little 3D mapperoo. I mean, there's probably some node modules. This library did seem really cool for doing exchange, just like doing trading in general. Do they have anything on backtesting here? No. So this isn't a backtester, this is just for does seem really cool. Oh, what? Costs money? Oh, I think, what? That's crazy. What's the difference between the pro and the not pro? Oh, the trade one is... What is the pro? Hmm. Hmm. What am I looking at? Hmm. Very interesting. Doesn't help me with backtesting though. Hmm. So it seems like I really just need to know the variables for back testing. Some universal backtesting statistics include net profit or loss, volatility measures, maximum percentage upside and downside, averages. Alright, so I should probably just look through these books and figure out um, um alright, so might need to write down some definitions and stuff here. So this guy says risk per trade. All right, let's write some of these down. It's a minute for me. Entry trigger. Stop loss. How do you exit? Okay. What does this guy say? Net profit or loss, volatility measures, averages. I guess I could just like copy this. Net profit or loss, the percentage gained or loss, volatility measure. Simple swing trading strategy. Alright, so yeah, seems like I need to just set up some sort of swing trading strategy. And then I'll know like some of the different parameters that I'll need, and then I just increment my way through the data and make trades. So let's see. I'm a sucker for books. Wow. Okay, I don't really want to buy swing trading for dummies, but if it's actually good. Oh, I never thought to look on Wikipedia. Hmm. Okay. Oh, and then you just trade at the moving average line. Oh, interesting. So basically, when you calculate the moving average line, if it falls below the line, you would want to sell. And if it goes above the line, then you'd want to buy. Hmm. Hmm. I mean, that seems pretty simple. Cool. So you can, yeah, you can change your moving average length because, like, if you have a shorter length, then it's going to be a more volatile moving average, and you're going to have more probably opportunities to trade, but you'll still have kind of a rough estimate of how things are playing out. Cool. Okay. All right. Well, I'll start with a moving average. Yeah, when asset prices cross over the moving averages, it might generate a trading signal for traders. Cool. That makes sense. That makes a lot of sense. So I don't really need a ton of backtesting help necessarily. I was looking at more backtesting and less like, oh, here's a strategy and you just need to apply this to your data. Because I don't like, it's not hard to just like run through your data, but I didn't know like what variables I needed. But the variables are for the strategy, not for the backtesting, if that makes sense. The backtesting is agnostic to whatever trading strategy you throw at it. Very cool, very cool, very cool. Cool. I'm excited about this. It's gonna be super easy. All right. Well, I might even be able to write some code. Ooh, I got emails on there. Oh boy. Oh boy. I'm just gonna close that. Let's see here. Let's get my trading boy up here. Oops. Okay. Get rid of the Python. Python was ridiculous. I was so dumb. I hate Python. I've never like hated a language before, but man, that was bad. It was just weird. All right. I'm sure I wouldn't be saying that if I actually knew how to code in Python, but it just seemed weird. And I always get confused with the Python 2, Python 3 stuff. It's super weird too. Okay, so I'm gonna probably make a new guy here. We'll call it backtest.js. All right. And I'm gonna pull in my data. That's actually in my article. Which, by the way, we hit 600 email subscribers the other day. This day. We needed one, which is cool. All right. I don't really need .end for this one. I don't even think I need fetch for it. I wonder if I should do like a Yeah, 3JS is not the thing that I want. Wow, this stuff is crazy. Three.js is nuts. Ooh. Oh, did that? Okay, it did. Fine. Okay. Weird. How do I get rid of the F? Okay. So this gets all the data. All right, so function strategy. I'll just do the simple moving average. And then we'll do current, historical, it lets through a significant amount of the signal shorter than the window length. Oh, so I actually want the cumulative moving average. Yeah. Okay. So, I'm just trying to think of what I should return. I guess I could just return like some sort of object or something that just says like trade, true, false, and then if it is true, then what type of trade am I buying or selling? That's probably what I'll return. All right, simple moving average. So I'll take the, I'll do 4 prices in of historical and then I'll have let cum cumulative plus equals price I'll go ticker. Alright, guys, I could do like price. Yeah, price is fine. That's the price of the stock. So cumulative price equals or plus equals price. And then cumulative equals cumulative divided by cumulative historical dot length. Okay, so that gives me the average cumulative. I'll call it let average. And then say if average is greater than or equal to current, oh, and then I'll do, should I say like the last trade? Yeah. Yeah. So I'll do like so the average is above the trading line. And I'll say if last trade is greater than the average, do nothing. I'll say, so I'll return trade false type null. So basically the last trade is like up here and the price is below the average. So that means like if the previous trade was higher, then I wouldn't want to like do anything. I would want to wait till it like comes back up above the average before I buy again. So this is going to be price is less than the average. Average is less than, oops, it's average, AVG, not average. So then what's the scenario if the average is still above what the current price is, but the last trade was less than the current price? And that means, oh, you know what? If the last trade was greater than the average, and now the price is below the average, then I actually do want to trade. I want to sell. I guess sell can be one. Let's call it sell. Um, okay. So I can see how this can get a little bit more sophisticated because you want to you don't always want to trade like on the line. You might want to like trade slightly below or slightly above the line. So you can almost have like a weight added to this average here, where you could be like average plus or minus 5% or something like that, so that it's like a little bit more of a significant event. But for this one, we can just try it with like the average. Okay, so else all right, I have no idea if this is right. This is what I'm just coming up with on the spot. All right, so else the average is less than the current. So it's basically just gonna be this flipped. If the last trade is less than the average, we're gonna buy. Yeah, so the last trade was down here, but the average is here, and the price has crossed over the average. We're gonna buy because it's trending up. And now average is greater, and then else the average is less than the last trade. So if you nothing. Cool. This is gonna be false. True. No. It's gonna be false. Cool. Okay. I'll call this CMA. Well, that's easy. Okay, so I gotta get the ticker data into my ticker data, and then I'll have to figure out like how to calculate like the percentages of increase and stuff like that, because it'll be based on like the last trade. But that's also if I'm trading my whole portfolio. So this is going to get interesting. Cool. I'm excited about this. But yeah, I kind of have an idea now of like, okay, like this is my cumulative moving average. So I have like this system now. This is my first trading algorithm. But now I have to kind of build out some infrastructure to go through the data, but then also like I need some variables and tweaking for like how much of my position I want to trade. Like if I want, technically I could do like the whole position, like buy, sell, buy, sell, buy, sell, but like I don't know if I actually want to do that or not. I mean, I could just do that to start because that would be the easiest thing. But those are some of the things that you want to tweak, and you want to kind of almost do like a Monte Carlo analysis on, was like basically going through all the different ranges of like your portfolio, 0 to 100%. Well, I guess it'd be 1 to 100% of your portfolio. How much are you actually going to bet against this trade? And maybe that's based on how quickly it's rising and how quickly it's falling. You never know. I don't actually know that. I think part of me wants to keep my positions small enough so that like you can always just bet the whole thing. Because that's going to maximize your gains, but it's also going to maximize your lows too. So I don't know. Cool. All right, getting a little excited. I gotta figure out. Yeah, I gotta calculate what my returns are gonna be, because like, when I take a trade, okay, you bought at that price, and so you have like, $200 at that price. So then you have a certain percentage of Bitcoin or whatever your coin is, or you have a certain amount of that coin, and then later on you sell, and if you sell the whole position, now you kind of have to calculate, okay, well, how much did I buy and how much did I sell, and then what's my net profit in that scenario. And then I'll want to have to factor in like trading fees and exchange rates and stuff like that. So it's gonna be pretty interesting. Kind of excited about it, but like definitely looking up like the moving average, like swing trading, definitely came up with a lot more of what I was looking for, where it's like, oh, here's some actual trading strategies. Because like the backtesting is easy. Once you have the strategy, you just have to like do all of the infrastructure for actually taking into account. And that's actually probably where this book will be helpful, because that's actually what this book is showing you. This book isn't showing you any strategies. It's showing you some of the things that you can do to analyze your strategy better, which is why it may have been confusing to me at first, because I thought it was going to give me like a whole strategy, but it does not. So yeah, I'm excited about this. It's gonna be sweet, but I'm already at an hour. It's late. I'm gonna go to bed.